Welcome to Unlocked, an NAMFS podcast. In the second episode of Season 2, we will discuss what Mortgagee Letter 25-12 means to the field. Let's get started.
Good afternoon, everybody, and welcome to Season 2 of our NAMFS podcast. This season, we're talking about mortgagee letters and HUD regulatory and guideline changes. So I'm very excited for the topics this month. But I'd like to start with introductions. I'm Kellie Chambers, President and COO of G7 Service Group. We're a national field service, property preservation, and inspection company. Donna, would you like to take an opportunity to introduce yourself?
Sure. I'm Donna Schmidt. I've been in the industry for about 40 years. I'm the president and CEO of both DLS Servicing Consultants, which offers loss mitigation outsourcing options for servicers, as well as quality control and other default consulting support. And then waterfallcalc.com, which is a online cloud-based loss mitigation calculation and analysis tool that servicers can use on their own.
Fantastic. And Eric?
My name's Eric Miller. I'm the Executive Director of NAMFS. I've been in the industry for about 20 plus years at national, as well as now about 12 years as the Executive Director. So we're excited to be here.
Great. I'm excited for episode 2 this season. So today we're going to tackle Mortgagee Letter 2025-12. It was an update or a refresh or a reminder of the definition of the default date, as well as some changes to the loss mitigation processes that may impact delinquency volumes. You know, in our industry, the default date drives everything. It triggers inspections, it triggers occupancy verifications that need to occur, when to start property preservation, when allowable expenses start to pile up, extension requests, conveyance deadlines, and ultimately claim eligibility for that refund from the investor. So I've asked Donna to help explain how this mortgagee letter affects early stage delinquency workflows and discuss what the field service professionals in the field should be adjusting to avoid those compliance gaps, which ultimately cause curtailments and inability to reclaim or claim refunds from HUD. So let's dive in. So Donna, Mortgagee Letter 2025 changed the loss mitigation options available to borrowers. Can you highlight some of those changes for us?
Yeah, the best news was they stopped the hamster wheel. Basically, a borrower, all they had to do was fog a mirror. And if they fogged a mirror, they got a loss mitigation option. And unfortunately, that wasn't always in the best interest of the borrower and wasn't always in the best interests of FHA. Definitely not the servicer, because it created this repeated cycle of wash, rinse, and repeat over and over and over again. We've actually seen loans where the borrower has had 6 partial claims and they've made a total of maybe 3 payments on their own over a 4-year period of time. So our goal was now to get it. Actually, the head of FHA had a really good analogy at one of the meetings I was at. And he basically said it was like putting a cast. This was supposed to be an emergency. The COVID options were supposed to be an emergency. And so it was like leaving a cast on an arm that healed 3 years before. And it was absolutely unnecessary. So yeah, the new programs, while the calculations are pretty similar, they added more guardrails to stop the whole hamster wheel.
It's fantastic. So how does this affect ordering inspection volumes and occupancy verifications that trigger from that default date?
Well, the default date is a little different. What they did was they caused excessive amounts of panic. And if you want to see absolute insanity erupt, be on an MBA meeting discussing that topic. FHA said basically that the date of default couldn't keep moving even if the borrower made partial payments, which meant servicers were going to be forced to foreclose long before the loan was even 4 months delinquent. Thankfully, FHA saw the wisdom of that and they issued a waiver reversing that decision. So we're back to the old traditional interpretation of date of default. So that won't really change things. But the biggest change that's going to happen is borrowers who can't really afford their mortgage are now moving towards foreclosure. That is something we've seen historical low foreclosure rates over the last 5 years, let's say. And to me, you know, I've been in this business 40 years. There's always like this kind of baseline of loans that head to foreclosure. Sadly, it's been pretty historic over that 40-year period of time, about 1%. Well, during COVID, it dropped down to nothing because we just kept giving away free money. And now that pipeline of normal loans that should have gone through over the last 5 years are going to consolidate, condense, and get squeezed through probably in the next 2 years. So my feeling is property preservation companies are going to see a whole lot more loans get severely delinquent. There'll be a lot more inspections, and there'll be a lot more loans actually heading towards foreclosure.
Yeah, one of those reasons that we're anticipating an increase in delinquencies and occupancy inspections is trial payment plans. So can you talk to us about the requirement of the trial payment plan and why that's such a significant factor in more loans going through the foreclosure process?
Right. So beginning on October 1, FHA required every loan that is being reviewed under loss mitigation to get a 3-month trial plan. And generally speaking, that is to prove you can actually afford your payment. Like I said, we've had scenarios where borrowers have gotten multiple partial claim after partial claim, and they don't even make payments in between them. So, and the fact is, there was even no criteria before to say, do you have a job? Do you even have any income coming in at all? They just had to say, yeah, I can afford the payment. And if that's all they said, then okay, we got to give you something. And the problem with that is in many cases, they didn't have any income or they didn't have any way to come in. So the trial payment plan will weed out those borrowers that truly can't afford their payment, even if they think they can. The data is still out on that because most of these trial plans ended either January or February. And so we're still trying to get the data from our clients to find out how many of these borrowers actually failed their workouts or failed their trial plans. So they're not going to get the final workout.
Yeah. And I think an interesting statistic that HUD shared at the MBA, as well as MBA and other statisticians, nearly 2 million borrowers went through these loss mitigation programs prior to the change. That's a significant amount of borrowers now that have to pass a trial payment plan, make 3 consecutive monthly payments, or their loss mitigation options conclude and they just move on to the foreclosure process. Did I understand that correctly?
100%. So that's why I believe we're preparing our clients to see double the foreclosures in their FHA book of business that they saw in 2024 for 2026 and 2027. And then after that, we'll get a better gauge of where we are. But we think double is not a high estimate.
Great. And so on the property preservation side, Eric, I think if borrowers, what we're seeing is that borrowers that weren't making their mortgage payments because maybe they don't have a job due to economic factors in their jurisdiction, they're likely not maintaining the property. And the properties coming through the initial secures early on right now just seem to have a higher degree of mortgagor neglect or maintenance neglect over the last several years. So knowing that these homes may have experienced, deferred maintenance, property preservation companies are seeing an increase in damages. So what hints and tips and tools should our membership be looking out for on these initial secures in reaction to the property conditions we're experiencing already?
I think the biggest thing that's out there, and obviously Donna talked a lot about it, but there is a kind of a delay, right? We already do see significant delinquencies increasing above what was 2020 pre-pandemic levels. Unfortunately, foreclosures are trailing. But when you get into actually the properties themselves, key is going to be spending the appropriate amount of time documenting everything that you see at that property. Within the FHA rules, what is reported on that initial, delinquency inspection is really what drives, actions and can set yourself up for success or, some challenges. That's everyone in the supply chain. So making sure that you're well aware of those timelines, not only just, kind of the internal timelines, but what are the timelines according to FHA guidelines or the investor insurer guidelines? That's important to know. Making sure you're accurately documenting and taking photographs of all the damages or conditions at a property. And then the big thing is, as Don indicated, if numbers double, which she doesn't feel is outside the realm of possibility, it's going to be making sure that we're prepared. making sure that you have the appropriate individuals in the field to make sure that you go out to the property and that you can get the work done in a timely manner and very thorough. So I think those are probably the big things that we're looking at.
Great. How lucky are we to have Donna join us in today's podcast? You know, Donna in a recent webinar also shared how important it is for servicing teams to really look at their programming and make sure that they're triggering those inspections timely to comply with the mortgagee letter. So I think now is a good time to tighten all processes across every single step of the process, whether you're a servicer, a national field service provider, or boots on the ground doing the inspections and the initial secures at the property. So at NAMFS, you know, we remain committed to helping the industry navigate these changes with clarity and collaboration. So I really appreciate the opportunity to have an expert like Donna join us today and share the servicer's perspective. So thank you for joining us, and I hope you guys all join us for the next episode. Have a great day.
Thank you.
Thank you for watching and listening to Unlocked, a NAMFS podcast. Be sure to subscribe to the NAMFS YouTube channel or follow us wherever you get your podcasts so you never miss an episode. We'll be back next Wednesday with another Season 2 conversation, and we look forward to having you join us.